Hello, everyone. My name is Deepak, and with me is legendary Sanjeev Gupta, CPA. And today we are going to talk about the Indian budget. Every time India comes out with a budget, it impacts millions of people. And many of us who no longer live in India, it certainly has impact on us as well. Some of you guys may be on H1, so you kind of like in both boats. You got business going in India and you got business going in the United States. Some of you guys are permanently now settled in the United States, but you still have assets in India. You still have bank accounts in India. You still got properties in India. In matter of fact, many of you guys believe in Indian economy and you invest in India. So we cannot literally ignore the Indian budget. So that's why I thought maybe I talked to Sanjeevji a little bit and pick his brain about what is going on in India right now. So this is what I do know, Sanjeevji, and then I want you to add on to it, okay? What I do know is Indian GDP is slowing. It's not as fast as a lot of people think, because India has huge inflation. So whenever you have a huge inflation, you got to take the inflation out of the GDP growth and you add all those two numbers up, they don't really look that exciting. And then on top of that, India has the least, well, I wouldn't say least number of, but they certainly don't have high number of people paying income taxes. Is I think the last time I checked, the number is less than 2% or 3% of entire population. So when India comes out with a budget, it certainly needs to address a lot of concerns because we need to grow the country. We need to worry about defense. We need to worry about education. We need to worry about immigration. But at the same time, we need to make sure people are able to make money. And I think that's the major concern right now. People are worried about their jobs. People are worried about inflation. People are worried about growth slowing down. So Sanjeevji, give me a quick update as to what's happening with Indian budget.
Yes, so the Indian budget 2025 brought a lot of cheers for middle class families. Of course, we have the election in Delhi going on. That was kept in mind that time the Indian budget was presented. Because the middle class always feel that the ruling party, the BJP, is not doing much for the middle class. They look for either higher class or lower class, but nothing for middle class. Middle class has been squeezed in between every time. Every time they don't get nothing from the budget so far. But this time, the finance minister gives a lot of soaps for the middle class. So if you are for us, we are more concerned about the non-resident Indian. When we talk about non-resident Indian, uh, there are two definitions that come from non-resident Indians, coming from the FEMA requirements and coming from the Income Tax Act of 1961. So definition of non-resident Indian from FEMA requirements is if you're outside India for more than 6 months, you become a non-resident Indian. But from Income Tax Act, there's certain regulation you have to follow. There's certain tests you have to follow. There's no clear definition of non-resident Indian other than saying that if you're not a resident or you're not in an RNOR status, you become a non-resident. So generally, what we see when it comes to Income Tax Act for the definition of non-resident Indian is if you stay outside the country for more than 7 years. Of course, there's computation of 730 days and sub-test of sub-test. If you're outside of India for more than 7 years, generally you're considered non-resident from the income tax point of view, not from the FEMA point of view. So this budget is for the non-resident Indian from the income tax point of view, not from the FEMA point of view, says that if your income is up to 4 lakh rupees, if you have income up to 4 lakhs coming from different sources, it can be from income from rental property, it can be from income from salaries, it can be from income from business, it can be income from other sources. Anything up to 4 lakh rupees, you pay no taxes. Earlier it was 2 lakh 50,000, now they increase it to 4 lakh rupees. Now, for resident who are resident of that country and who are people who are in resident but not ordinary resident, who are the people what do you mean by resident but not ordinary resident? People who are who have come back to India and stayed there for 2 years. After spending time more than 7 years, they become resident but not ordinary resident for 2 years. So for those people, the income up to 12 lakh rupees, you pay no taxes because they get tax rebates, and tax rebate is equal to standard deduction. They get 75,000 rupees. So if you see from 4 lakh to 12 lakhs, the tax comes to around 60 lakh rupees, 60,000 rupees. But if you take a standard deduction of 75,000 rupees, you end up paying no taxes. So that's how they say 12 lakh rupees, up to 12 lakh, you pay no taxes, but that is only for resident but not ordinary resident. For ourselves, for non-resident Indians, Up to 4 lakh rupees, you pay no taxes. After that, there's a 5%, 10%, 15% slab as we make more. As we keep making more, the highest slab rate is around 27%. So that's how the tax works for the as that's what the tax regulation says in the Indian budget. Now, that being said, the finance minister do came out with another thing that they are going to bring a new tax bill next week, hopefully in a week or so, uh, to simplify the tax collection process and tax administration process. So we have to find out what are those bills, what are those things for non-resident Indians. One more thing, a few more things were added in the Indian budget relating to non-resident Indians, were the tightening the scrutiny of the applications for not declaring foreign income, foreign sources. So they're targeting young students, young professionals who have come out from India. They are working here, but they have good income. They have good income and good ties to India, but they are not reporting foreign income. They are not filing that form Schedule FA, which is foreign asset, which is attached to their 1040, or attached to the ITR. 1040 is for the US, which is attached to their ITR. Their schedule of foreign asset is very big uh, schedule, but needs to be reported like we have here, F bar and 8938. Same thing, there is a Schedule FA. So that Schedule FA, people are not reporting it properly. They are just filing wrong returns in India. They are not filing ITR2, which is meant for non-resident. They're filing ITR1, which is meant for resident. Even the chartered accountant in India are not doing proper work for people over here. So now they're tightening the scrutiny on that one. It's more complex. They want to see that schedule properly listed. If you keep sending money to India, uh, then they will scrutinize you under the LRS scheme. Why you're sending so much money? What is the basis? Are you reporting correctly that income earnings from outside or not? If not reporting correctly, then they can tax you on the repatriation or sending money. Plus, they also want to uh, make sure that when you come back to India, and if you're not reporting your foreign income, foreign asset also requirements properly on that ITR2, then they can tax you on when you come back. So there are things they're tightening the screws on the foreign income reporting, like in compliance with direct tax avoidance treaty agreement. And remember, to get the direct tax avoidance agreement, one has to declare income in both the countries. One has to declare the asset. One has to follow the regulations. Then only you can get a credit under that treaty. So if you don't follow the instructions, you will not get credit. You will be subject to a lot of penalties, and you will be subject to. In India, we have a I think, money laundering, black money act or something that penalize you 10 lakh rupees of penalty of not declaring. So things are changing in that direction. It's a lot of compliance for the non-residents.
Now, guys, I know Sanjeev ji probably already gave you a brain freeze, used a lot of different words. We're going to break it down quite a bit in our upcoming webinar that is happening on this Saturday. Now, that was supposed to be dedicated to only preparing for 2024 tax filing, but we were hoping that Trump administration by now would have come up with at least some clarity as to which direction they are going to go. Now, we don't know what he wants to do, but we cannot depend on that, right? Until it becomes a law, until it's signed and everything is good, we cannot plan based on that. We know he wants to extend the tax cuts. We know he wants to get rid of certain credits and certain deductions, and he wants to reduce certain tax rate for certain people. Like he has clearly talked about reducing taxes on Social Security. He has talked about reducing taxes on tips. He has talked about bringing manufacturing jobs in the U.S. and perhaps even reducing taxes on C corporations. So there's a lot of stuff that we need to still figure out, but we don't have that clarity yet. However, we do have this Indian budget. So during the webinar, I will try to ask Sanjeev ji some more questions because it does touch so many of us. One of the problems, Sanjeev ji, I'm seeing when it comes down to reporting of foreign income is I think a lot of people still don't realize that they are now NRIs and they're still operating their Indian business as like they're Indian residents. And that creates confusion because they file the report in the US as a US resident. And then they either not file the report in India, or if they do file the report in India, they're filing it as an Indian resident, which is conflicting on its own. And then I see people buying properties without taking care of this stuff. I'm seeing people getting tax notices 5 years, 10 years, 15 years ago that, hey, how did you buy this property? Where did this money come from? Just today, I had somebody reached out to me and they said, hey, I got a notice from IRS. Okay, hear me out. This is gonna blow your mind. I'm sure you probably get something similar too. He got a notice from IRS for a transaction he did 5 years ago. 5 years ago. Transaction he did 5 years ago, where he claimed that he had upgraded the property for $1 million, and he took depreciation on that. Probably took a lot of bonus depreciation and all that. And he's happy, right? IRS just sent him a letter. Tell us, where did this $1 million came from? The guy had a $200,000 income, and he showed that he invested $1 million into a property. IRS wants to know, tell us about the funds there. Look, I'm telling you this story because this is happening a lot in India as well now. People are missing out on making sure they're in compliance, and I think these notices going to even get bigger because India is also digitizing. A lot of banks are starting to participate, the government is starting to participate, and most importantly, India can use more funds. I mean, they want to buy lots of
Plus,
stuff.
plus, yeah, plus the Prime Minister Modi's focus is also on AI in
Yep,
everywhere.
big time.
So big time. So think about that. The scenario in India will be much changing faster than what we have in IRS here with President Trump in power. So we can see more transparency there in India. And one more example which I want to give is you talked about we still maintain all those businesses. Simple example, we still maintain our personal checking saving account when you are a non-resident here, which are not allowed, which are you're violating that's I said is a FEMA requirement. FEMA requirements is if you are outside India for more than 6 months, you have to convert that to non-resident accounts. So we are violating such big regulations. So of course we think we can get away from that, but I think in the years going ahead, like with the AI and all the stuff, and the more focused on the tax administration, the new bill that is going to come on the tax administration part, it will change a lot.
All right. So a couple of things, guys. Number one, please do come to the webinar. That's going to happen on this Saturday. Sanjeev and I will be discussing as to how do you prepare your 2024 tax returns. So you get the maximum deduction out of that. And after that, we're going to open it up for Q&A session. So if if your problems are simple, you don't really need to book a consulting appointment. You just wish you can get a quick answer. This is the platform. Many times people ask her, why do we have to go to consultation? Well, you come to consultation if you really want to 1 hour time so we can focus on your particular situation and come up with the right answer. But if you truly believe that your problem is not that complex and it can use a generic answer, then this is your spot. Come to the webinar. Feel free to ask your questions. I'll be there. Sanjeev will be there. We'll be happy to answer any questions you have. So this is your opportunity. Now, having that said, all of our offices are open. You can come to Fremont. You can come to, Stockton. You can come to, what do you call that? Sunnyvale
Sunnyvale
office. You can come into
and Pleasanton.
Pleasanton. So all of our offices are open. Staff is there. You can come shake hands with us. We even accept walk-ins, by the way. You can just walk into an office and we'll be happy to talk to you. But we'll prefer if you call the office. Just makes life so much easier for us. We can plan things a little bit better. If you want us to help you with your tax return, just call 510-825-7563 number, or just go to sanjeevcpa.com and you can submit a request. If you need something complex, you want Sanjeev to look over your situation and give you his personalized advice, then set up a consultation with him. Otherwise, you don't need to. You can just set, we will be happy to help you file your taxes and educate you on to what you need to do on the Indian sides and the US side. We do so many of these every single day. So you want to go to somebody who has good experience dealing with it. So many times every year, we see people getting stuck in Indian taxation as well as in US taxation because they work with somebody who just did not quite understood the things. And they took a quick path. Sometimes people take things in their own hand and they're doing it online and they don't realize how much money they're leaving on the table. So please take advantage of us. We are available. This is your time. February is your time. You come to us at the end of March or April, we will be super busy. We won't have time to talk to you. So please take advantage of this time. Book your time with Sanjeev or with our staff on sanjeevcpa.com in February and March. And then please don't forget to join the webinar. As far as getting the link for the webinar, it will be posted on our website. So just go to sanjeevcpa.com and register, and you get a Zoom link out of it. All right, Sanjeevji, thank you so much for clarifying that. I think a lot of people are going to benefit with this information, and I will see you on Saturday. We'll talk more about it. We'll talk about all the things that people miss out when they're filing their tax return, all the reasons why people are not able to take advantage of all the deductions that are available to them, all the credits that are available to them. Sometimes people end up overpaying because they're making silly mistakes. We're going to address that all. I'm going to address all of your questions as well. All right, Sanjeev, anything you want to add before we call it a day for
No,
today?
let's just, yeah, we want to see you. Like we said, the webinar is coming up. We are going to focus on documentations and things we don't want them to miss for documentation and the different categories. And because a lot of time we have seen that people do miss out. And those documentation are important, maybe very important, critical for the deductions. So we're going to cover all those things plus update on new forms that are coming up. So whatever we have, for sure, we know for sure for 2025, we know one thing is Trump has not, he does not, he has given a freeze on the hiring of the IRS agents. So indefinite freeze for others in 90 days. So we don't know what's going to happen with their returns being processed, processing of the returns, the refund might come, might not come. It will take more time. IRS already is way behind. So we have challenges, but hey, we have to do the right things and we have to move forward in the right directions.
Yeah, and that's a great point, Sanjeev. So that's another reason we want to wrap up your returns in the month of February. So please take advantage of that if you can. Thank you, Sanjeevji, and I'll see you on Saturday.
Thank you.